Welcome to this week's Cattle Call. I'm Susan Littlefield here on the Rural Radio Network. Another interesting week. If you remember back to Tuesday, we saw a break in the boxes, a turnaround on a Wednesday, but is this normal? I mean, we are post-Thanksgiving and the window is getting smaller to wrap up this 2022. Having said that, there's a lot of concerns about weather systems that are moving in. We haven't really had to deal with a lot of severe weather for these cattle out in the feedlots. We'll find out about that and a whole lot more on this week's episode. As you can see, Brad Kooima joins me. He is with Kooima and Farlick out of Sioux Center, Iowa. So let's start out talking about these boxes. A Tuesday drop, a Wednesday turnaround. Kind of typical post-Thanksgiving.
Yeah, thanks for having me on, Susan. Glad you're getting better with your knee.
Thanks.
I'm trying to make myself not be quite as sarcastic. Okay, so there's people that want to tie the cattle price to the box beef market. And I always go like, well, where are you going to get that information from? You're gonna trust that the backer's going to tell you what he sold boxes for, when the volume of trade on the boxes would represent a very small percentage of the total volume of box beef sold on a daily basis. So to me, this is, people, I guess, have gotten used to these wild gyrations in the pork product from sometimes the morning quote till the afternoon quote. For the most part, the beef market has been a little more of a, seems like as a little more, I was going to say honest, but a little more stable, less erratic, less volatile. But these last 2 days, this is a joke. Down 660 one day, up 830 the next. And what's particularly frustrating is it seemed like a lot of the traders were, the selling was triggered because of the weak box trade. And don't kid yourself. There's algorithms that are built based on if the certain news items hit the newswire, those trigger signals in algorithm trades. And so, I thought, okay, why didn't we get our $2 back today? That kind of frustrated me, after the way the market melted down yesterday. And again, I think hate to be so philosophical today, but the market, if you think about it, every morning there's a whole group of us that are potential sellers in the cattle. I'm talking about feeders, okay?
Mm-hmm.
People that have cattle. So if something happens to create that anxiety or to spook us, oh no, I better sell it, that. And it seems to me like those HFT type algorithmic type traders really prey on that kind of a marketplace. I don't know what to do about it. Well, it seems to me like they could slow them down. That would help. But there's an old saying around here that every day you can go home and hear news that would make the market go down the limit the next day, and very seldom do you go home with like, oh gosh, I hope there isn't some good news that'll makes us go up the limit, because when's the last time that's happened? So anyway, some of this, unfortunately, the softer boxes is probably, to your question, somewhat normal for right after Thanksgiving. Kind of neat the way it came right back today. This isn't the first time that the market's had some of this softness right after Thanksgiving. In fact, if you pulled out several years of charts, you'd see it's very, very normal. Sell off after Thanksgiving, and sometime toward the end of the first big week of December, that's when the market starts to catch. You start to see the rib meat start to have some more interest, the ribeye, the whole loin thing, the Christmas dinner, the New Year's Eve stuff. And then typically that demand for that middle, they call it, would stay actually pretty good all the way until, believe it or not, Super Bowl. So I like what I hear on demand on the other side of Christmas. I think that's good. And then, of course, in my opinion, the supply side of this market is kind of like, it is what it is. And it's going to be really hard to change that supply side, in my opinion.
So is there going to be a feel of a low working its way in before we wrap up in the next couple of weeks?
I think by next week, when we do this, if we do this, I think we'll be talking about the market feeling better already.
Good.
But take everything I say with a grain of salt. But this nice break right into this first week of December, very seasonally normal. And let's face it, we're still trading at a steep discount to cash. I mean, it's not like we're blowing up some sort of expectation of, oh man, the market's got to go up $10 to justify where we are. Not at all. There was 156 and 157 bids today in December. Cattle are less than 152. So it seems to me like, the market's got to kind of like bow its neck here a little bit. We haven't seen much cash trade leak yet today, by the way, Susan. a little tiny bit at 247 and a little bit of 156 and 157. But for the most part, I think the feedlots got a fair amount of resolve. They know that numbers are still tight, and they know that the choice is still hard to come by. So hopefully that kind of resolve will carry us here into the end of the week.
Well, here we are sitting in December. We really haven't had a lot of weather issues to deal with for these cattle. That's about to change.
That's a great point. And I thought too, maybe the market might be more sensitive to that today with the first real system. Really, we didn't even have any winter last year to speak of, so maybe the market is taking the, well, we'll believe it when we see it kind of a deal approach. Now, there is some difference of opinion on exactly what the main storm track is going to be. We're supposed to, like here in Northwest Iowa, we're supposed to get some snow tomorrow. But the real system is the one next week, where they're talking about a system that's going to last 3 or 4 days. Going to depend where you live, whether it's rain or snow, or probably a combination of both. The local talent here is suggesting it's someplace between Omaha and Sioux Falls. I'm nothing personal if you live in Kansas, but I'd be okay if it went a little further south. In effect, more of the cattle feeding area, but just kidding. Well, not really. So we'll see as the weather transpires. But if nothing else, some of the problem with the market, if you're bearish, like we talked about last week, I usually bring up average weights, right? If you're bearish, it's because the weights are too big, and they are big. There's no denying that statistic. It is what it is. And most of us have felt all along it's because our weather's been so mild. So these cattle have performed better than expected. Well, even if it's not a debilitating, knockdown blizzard, 3 days of rain and ice and snow is going to slow down these extraordinary gains back to something that's much, much less than that. So either way, I think it's a little bit supportive to the market, Susan.
All right, sounds good. We look forward to catching up with you next week and hopefully having some good cash news to pass along as we get ready to start wrapping up the year.
Perfect. Sounds good.
All right. Brad Kooima has been joining us, and as we always remind you, commodity futures and options do involve a substantial risk of loss not suitable to all investors. And that's been this week's Cattle Call on the Rural Radio Network.